Thoughts on the market from John Thompson of J.W. Thompson Investments in Providence. I know investors were happy to see what happened yesterday. I guess the question now is whether that's just a momentary blip or what.
Everything is kind of in a blippish type mood, Frank. We get 202 points up one day, and then we'll take 175 down the next, and then up 30 the next, and it's an up and down thing. It's all being driven by whatever the news event is for the day. If it's a positive type of thing, we're going to see the kind of action like we saw yesterday. As we unravel the European situation more and more, and we discover what the real implications of all of the debt crises for the various sovereign nations are, then we have another news event and we go back down. I think the thing that we saw yesterday more than anything else was that earnings still are key. And as companies come in and they deliver good earnings, then we're looking at a situation where the market is continuing to do well. And it's kind of interesting. A lot of companies weren't expected to deliver the quality of earnings that they are starting to show in this reporting period. And that's very, very good for investors, very, very good for the stock market.
If the President and Congress reach that debt ceiling agreement by the end of the month, and it looks like they're inching closer to that now, is that going to be a big rally in the stock market?
I don't think so. I don't think so. I think what we're doing now is we're baking it into the cake that that's going to happen. I think everyone assumes that there is no situation so dire that the United States government is going to close down. So we've baked that into the cake. What I will tell you will be a difficult situation for the market if for some strange reason they fail to come to an agreement. Then the market will have not an relief, but an and it'll be the opposite of a rally. It'll definitely take this market down.
All right, between now and then, that is the end of the month when we presume a decision will be reached, what should investors be doing? Where should we be positioning?
You know, with all of the things that are happening, because it's so event-driven, I don't think people should try to time a short-term market like this. You should stay in the market and be there for the good times and the bad. There's an old saying in our business that the stock market climbs a wall of worry. And with all the events that are going on out there in the world, it isn't like we haven't seen things like this before. We have, and we've overcome them. And the market has done especially well in times when you look at it and logically say, I don't think the market's going to do so well for the next 30 days, 60 days, 90 days. So what we continue to say to investors is you stay put in your 401k plans where you have stock mutual funds. If you're an investor that's got a long-term horizon, do not be spooked by any of these short-term events that happen.
That's important to remember. And John Thompson, we thank you for joining us.
You're welcome.
John